Hey traders, Raghee here. Welcome to Charts and Coffee. Hope everyone is having a good Tuesday morning. We're going to take a quick peek at the economic calendar for today. Obviously, a lot of the attention is going to be on what's going on tomorrow and the FOMC. And you can take a look here. This morning we had the CPI. CPI is a big deal in that we're getting this inflation metric right in front of the meeting, where for the most part, the expectations are largely that the Federal Reserve is going to hold. So if you take a look at the June 14, 90% right after CPI, tomorrow is the meeting. You can see here 90%. When we talk about something being fully discounted, if you head on over to the CME and you take a look at these target rate probabilities, this is absolutely quote unquote fully discounted. This is what is expected. This is what's priced into the market. And anything else is really a far, far, far lower possibility because we know what the probability is. This is what we have collectively aligned to. And maybe in another way of looking at this, this is what we've communicated to the Federal Reserve. This is what we're expecting from you, Jerome. We're expecting you to hold. This means that really largely the meeting is going to be about July. Now, what do I mean by that? We'll talk about this a little bit more in tomorrow's Charts and Coffee and my Sector Secrets folks. We have our triple header today. We've got our day trading the open where we day trade for about an hour and 5 minutes in the morning. That's my window, and it has been for just a little bit over a year now. We'll move on to about 40 minutes of looking for 1 hour and daily time frame short-term swings. And then we'll dive into this topic of the bonds and the currencies and the Federal Open Market Committee meeting tomorrow during our weekly macro. All right, so this is what we've got coming up. This is just sort of the precursor for what we're going to be dealing with tomorrow, and that what we'll be discussing this afternoon. July means the statement, the presser. It's all going to be about whether or not we expect a hike in July before a hold in September, likely a hold in November, and then possibly looking at a cut in December. All of the remainder of the months for 2023 will align according to very likely what is to hold. And so it gets very interesting here now. And then, what are the symbols that are going to be most affected aside from indices, right? Bonds, gold, the euro, and the US dollars. That's a lot of where that impact is going to be. All right, so that's what we've got coming up. And then let's go ahead and jump on over to our charts. As always, if you have any questions, feel free to type them in. TJ asks, what is that site? Sure, TJ, if you go to Google, it's probably the easiest way is to Google it. Just Google this right here, CME FedWatch tool. If you Google that, it'll come up with this CME group, the Chicago Mercantile Exchange, is actually where the Fed Fund futures, the futures contract, trades, and then they give us this nice organized look of the target rate probability. So when folks out there are talking about, well, the Federal Reserve is most likely to do this or do that, this is what they're looking at, right? When they talk about the lesser possibilities, again, this is what they're looking at. So yeah, if you never looked at it before, it's fantastic information. And this really, gang, this is macro. The Federal Reserve is the macro. The only reason I care at all about what CPI or NFP, tomorrow we have the PPI. The only reason we care at all about jobs, inflation, or growth is because the Federal Reserve cares about job, inflations, and growth. So if we can just distill all that to what do we think they're going to do, then that really takes everything and simplifies it and gives us a really good understanding of what to expect. Yes. In the meanwhile, here's the S&P futures contract moving up through 4,400. Last couple weeks, I've talked about 4,300 and why the move is fairly inevitable, especially when we've got 2 out of 3 of the cylinders, if you will, of this motor we call the S&P 500, technology and financials, right? 2 out of 3. We're still waiting on healthcare. Gang, if you're wondering how much more could the S&P go, now keep an eye on healthcare, because really since the latter part of May, financials have started to move up. Not a lot, but they got off the lows. XLK continues to make new highs. So when people say, well, S&P may not be capable of much more, again, we haven't even really seen a ton of participation from healthcare yet. It's starting to come along. When tech, financials, and healthcare, when all those 3 cylinders are firing away, that's what's going to continue to power this S&P higher. And then eventually, especially with financials and healthcare, that's going to help the Dow get out of its own way too. So heads up on those pieces. When we understand why the markets move, what the pieces are, it makes a whole lot more sense as to why something would exhaust or why something would continue to accelerate. All right, as always, gang, this show is about your questions. So let's go ahead and jump on into them. And let's see here, kicking it off with, let's see, what is the software I use when I show? Oh, Sergio, yeah. So last Friday, my internet got cut because where I live, everything's buried. So if someone just puts an errant shovel in the ground, it can cut the internet out for the whole entire area. Anyway, usually what I do on Fridays is share with you all, right, the trades. The software that I use for that, and I have for the last 2 or 3 videos that I've been sharing, is Trades, Trades Viz, V-I-Z. So Trades Viz. They're on sale right now, and I like it a lot. I've used 4 different pieces of software, and I really like theirs. One of the main reasons is I've been using a company called Tradier a little bit more, and Tradier and TradesViz connect, and the whole process becomes automated as far as the updating of those trades and then the graphs that I show you for wins, losses, and everything. So I really like that a lot. And one of the other reasons I like it a lot is TradesViz breaks down each trade, and I'll put that here in the thing. It's let me put it, since I have the screen up for you all. Tradesviz.com. I think they have a sale right now. I don't know these folks. I pay for this software just like everybody else. In fact, I missed a 50% off annual sale they're running, but I don't care because this software has been worth its weight in gold. But one of the things I really like is it breaks down every single trade. You can look at the time of day. You can look at the symbol, obviously basic things like that. And it doesn't get obsessed about what things that I really don't care about. 2 things I don't care about. Overall account growth. I know that sounds silly, but remember, when we just take a look at our account and not the individual trades, a lot of times poor habits can be covered up by 1 or 2 big trades. So really, sometimes a trader could be a home run hitter taking very poor trades, but a couple of trades are so outsized, so large, it masks problems that will be account killers later. So I'm not a big fan of the account balance. I want to see each trade and how it performed. The other thing that it shows me is points per trade. I don't care about percentages. Percentages are very deceptive. We deceive ourselves, right? At the end of the day, I don't pay my power bill with a percent. What I do is I look at how many points did I make for that trade, and then I know that's scalable. So points per contract is what I'm interested in, right? And those are things that TradesViz does. So a lot of reasons I like it a lot. Okay, next up is it likely, hey there, Shiny, is it likely to sell on news if FOMC holds rates since it's already pretty much factored into the market that the Fed will not raise rates? Great question, Shiny. So is a hold a surprise? Is it quote unquote good news? What will be likely the determining factor for the follow through today is not necessarily the hold. It will be the statement and how they seem to be setting us up for July. Like I said, this meeting is really about that July meeting. And then the fireworks usually are the press conference that follows. So perhaps initially in the opening moments, there could be that buy the rumor, sell the news. We could see a little bit of weakness in indices and things like that. However, the statement is going to be, so you can look at, say, the Wall Street Journal statement tracker for the difference in the previous statement to the current, but really it's going to be the press conference. And does it appear that the Federal Reserve is setting us, meaning traders and investors, up for a hike in July? That's likely going to be the ultimate direction. All right, next up is, what is my view on Nike? Well, my indicators are indicating that Nike is in a downtrend. So sneakers are in a downtrend. Love the movie Air. Loved it. But Nike is in a downtrend. And that means it's short the rip. That means when we look at the gold zone of the daily price movement range, we look at the resistance of our automated support and resistance, those are short sells. And that's my view on Nike. Now, interestingly enough, not everything in XLY, not everything in consumer discretionary is a mess. In fact, consumer discretionary itself is moving higher. So if I could add one more layer to that, if I see an uptrend on consumer discretionary, if I see an uptrend on Amazon, there are stocks in that group that Nike belongs to that are looking far better and far more bullish than Nike. And I'm not going to be too fond of shorting into a stock weighted in a sector, weighted in a corner of the market that's really bullish. So that's another way to do it. All right, next question coming from our training room comes from Alan. You used to have a link to an ETF website. The one that I use all the time, ETFDB. ETFDB.com, Alan. Yeah, that's the one that I use, probably every single day in the Sector Secrets Mastery. Yeah, we're in that a lot. All right, next up from our training room from Nomo FOMO, do I typically look for laggard sectors like healthcare to then surge more than others? Okay, yeah, so FOMO, that's Nomo FOMO, that's really a big part of sector rotation. That's something we talk about on Tuesday afternoons during our macro, but I'll give you a little insight into what I do. So presuming that there's going to be a laggard sector that's going to catch up, and it's important that you mentioned healthcare. And the reason I say that is because the sector matters, right? The sector matters. If I'm going to go say, well, is solar going to play catch up? Not necessarily. Are home builders going to play catch up, or regional banks or retail? The reason I say it's so important that you chose healthcare is if the S&P is moving higher, financials are moving higher, if XLK is moving higher, technology, at some point that's a rising tide. So where the boat, meaning the stock or the sector, is within the tide, in this case, the index, matters. And yes, if financials and tech continue to move higher, at some point, it will take healthcare with it. But then we can also break that down again, Nomo FOMO, and look at healthcare and individual stocks within it that are showing signs of strength. So we're always looking at the larger thing and then going to the smaller thing, which is why, I've been teaching index, sector, stock. Start with the larger thing and then funnel down to the smaller thing. So do I do that? I will, but it depends on the sector. In the case of healthcare, that would be very much attached to what's happening in the S&P and even the Dow, right? Because healthcare is not weighted in the NASDAQ. Financials really are not weighted in the NASDAQ, but they're significantly weighted in the Dow and the S&P. So yes, I will look for that kind of rotation, but I won't presume it. We've got to see evidence of it first. I think there's sometimes this notion that we can predict rotation. I think we can fine tune or narrow down to the individual sectors or stocks that are most likely to rotate as, say, there's profit taking in the upper echelon of stocks, and then that profit goes into benefit stocks where there's some bargain hunting. That's another way of thinking about rotation. But we've got to look at where they're weighted. And I think that's really oftentimes something that's overlooked. All right, back to our, YouTube. Al asks, rig on the daily. Looks like it's consolidating. There's a lot of confusion in currently in crude oil. XLE is in a downtrend, Exxon's in a downtrend, or at least very, very weak. Rig is just sort of sitting on the 200. What I would say with Rig is look for volume. It's a sub $20 stock, it's a sub $10 stock, right? Look at volume. I want to find volume ledges. Volume is massively important, gang. So if we're wondering what quote unquote big money is doing, what do you think big is, right? Big is size. So volume is the way we decode that. That's why I use tools like V-score, anchored VWAP, volume profile. So I would work that in out, and then I would look at that 200. Look how many times since basically we broke above the 200, the white dots on my screen, we've bounced off at 1, 2, almost 3, almost 4, maybe 5. Look at the Darvis as well. You'll notice the automated Darvis is looking great. If you want to automate support and resistance on your chart, you can do so with the Darvis 2.0. I make it available free in the main rooms. It's also available free in our simpler version, which is different than the one built in to TOS. It's different than traditional Darvis. We call it 2.0 for a reason. You can also grab it over at TradingView. If you go to simpler and search under indicators, you'll see the Darvis 2.0 there. All right, so yeah, I would focus on that level in the 200, grab some volume, and I think you're in really, really good shape. All right, Earl asks, how does the current 1.908 put call ratio on the SPX factor into your trading decisions? Earl, I mean this and not in a sassy way, zero. It does not factor in at all. Not for me. I do not use market internals because market internals are not high concentration weighted like the averages actually are, right? So at some point, we have to acknowledge and accept that the S&P really is 20 stocks. Wrong, I thought it's the S&P 500. Not in any meaningful way, right? There are about 20 and practically closer to 6 to 8 stocks that are impactful to where the index is going, whether that's SPY, whether that's ES futures, MES micro, or the SPX. So I do not use market internals at all, right? At all. However, that being said, just because I don't use it doesn't mean they're not useful. They're just not useful to me because I look at the market from a high concentration weighted perspective. And if I want to know where equities are going next, if I want to know where the index is going next, Earl, I'm going to go back to what I mentioned. What's XLK doing? What are the high concentration weighted stocks in it doing? What's XLF doing? What are the high concentration weighted stocks in it doing? Same thing with XLV. So I look at the actual components of the index from a high concentration weighted standpoint. All right, next up is, let's see, what's the difference? Hey there, Srini. What's the difference? We were just talking about the Darvis 2.0 and 3.0. Sure. So, Srini, the difference is this. Well, first of all, let me state the most obvious difference. 2.0 I've been making available free since about 2016. So that's an indicator that I use to automate what I like to use as far as my variation of Darvis. It's very much influenced by Nicholas Darvis's work from the late 50s and 60s, but we modernized it for today's markets. So that's 2.0, and we made it available, like I mentioned. 3.0 is a premium one. And the main thing that 3.0 adds is a pattern that I have been using since the late 80s. It's a pattern called minor highs and minor lows. If you're not familiar with them, hit me up in one of Charts and Coffee. I'm happy to walk you through it. It's one of the most powerful patterns I've used. It was probably one of the first patterns I ever learned to use in the late 80s when I started trading. And I first read about it in 1986 or 1987. I love classic tools like that that are seemingly forgotten by the markets. And so the minor high, minor low, actually, when I started studying Darvis, is built into the box or the channel as I've reduced it to. And finding minor highs and minor lows is a key part of the Darvis. So I thought, see these pink and green arrows, Srini? Those are minor highs and minor lows. And the Darvis 3.0 identifies these patterns as they are forming, which is a really important part of using them. We don't want to know after they've formed. We want to know as they're forming so that we can follow the process for using them for entry. And so that's the big difference there. All right. So let's see here. One more question and we will wrap it up. Sergio says, I thought I was the only one who doesn't care about percentages. And folks, nope, you've got good company, Sergio. As I like to say, I don't pay the power bill with a percent. I think at the end of the day, we look at how many points has the trade made per contract. And I don't mean in its entirety either. Because if I trade, we were trading the TLT the other day, last Friday. In fact, today in the Countdown Trader, there will be, I believe today, we're going to have a pretty beefy update on this very topic. So if you haven't checked it out yet, saying, Rog, yeah, talk to me about percents and points and risk and trades. I think it's about a 6-minute update. It will be well worth your time. It's going to be at countdowntrader.com. And I said, look, some of our traders could have traded it for 2 contracts. There were 55-cent options. Well, if 55-cent options move, right, and it moved 50%, how much money was that? Not much. It was 25 cents. It was $25. But it sounds so beefy if I say 50%, right? At the end of the day, we want to understand scalability and measure in points, right? And that's where a lot of our traders said, Rog, it's 53 cents. I played 20 or 30 of them. And that's where the needle mover comes in, right? So I talk about risk and I talk about reward and points in that video. I think you'll love it, Sergio. Countdowntrader.com later on today. Okay, thank you as always for being here for Charts and Coffee, gang. My Caffeinate and Dominate crew. I'm late for my futures and sector secret session. Let me head on over there now. Thanks as always, gang. I'll see you tomorrow. Be good to each other.